Morning, everybody. Mike Vacchi, Princeton Trader, here for ntmarkets.com with your Friday morning pre-market webcast. Okay, so yesterday we saw, when we talked last, we were in the middle of the Globex session, and Europe sold their open, and we had some bearish follow-through right down to this purple line here, which is 1632.75. And we've been mentioning 1632 half to 1633 for a while now, because it was the top of this range where 1620 had proved to be support. We were in a range there from 1620 to 1632 half for a few days. We were basing, and I thought that was important then, and I still think it's important now. We broke out of that range. We ran up all the way up to 1685.75, and we retraced back down to test the top of that range, which is not very surprising from a technical standpoint. So the issue becomes, where do we go from here? So for me, I was talking yesterday, and I put out on Twitter that the 1660 area, it was big on this down day. It was very important on this down day. When we cracked 1660, it opened the door for the bears to really get some momentum to the downside. Why was 1660 important? Because that was the area in here, these 2 days. That was this support area. So now, I'm a big believer in my technical analysis of the old adage of support becomes resistance. And what I'm looking for right now is, does 1660 now become resistance? And I'm not ready to call it resistance yet, because yes, the high from yesterday's trading was 59, but it didn't really trade that way. It didn't trade like we went up, tried it, didn't get it done. We're getting into a situation again where Europe seems to want to sell their open. So, I tweeted about that this morning, and I would say, keep an eye on that, because if that becomes a pattern, that's okay, because that's a situation where everybody gets what they want. The bears can get their work done at night as Europe sells their open. The bulls are happy because they have an AM low to buy. But typically that will play out in a stair-step down kind of a pattern. So overall the bears will be happy and the bulls will be happy because they have something to buy every day. They just better not marry it and try to hold it, because they're going to get burned. But that's for next week. We'll have to see if that pattern plays out. It's been happening for 2 days in a row. 2 days in a row means nothing, especially not going into a 3-day weekend. So watch 1660 to 1664, see if that becomes resistance. There's a couple fibs in here. Just from the 85 trade down to yesterday's lows at 32.75. The 50% retrace is 59.25. The 62% retrace is 65.5. This zone, for me, this zone is a resistance zone for me. If the bulls can get through that zone, I think we do new highs. If that zone turns into a lower high, I think we break 32.5 and we make new lows, with the next stop being 1626.5, and then down into this area over time, 1604 to 1608. There's a couple fibs down there. So things to look out for. But the key is, does 1660 stay good? And I would be very, very wary if we had a big sell-off today or went straight down to the middle band here in the 1627, 1626 area. I think that sets up well for the bulls as a buy. That's just, that's 3 to 4 days down, straight to the middle band, and that's, that's going to bounce. How high it bounces, then we get back into the 1660 scenario. So just an upside and a downside level to look at today. I'd be careful doing a lot today. We got a 3-day weekend. I think volumes will taper off. Watch your stuff. Don't get in some big old cumbersome trade that you're going to have to worry about for 3 days. Okay? Everybody have a fantastic weekend, fantastic Memorial Day weekend. Mike Vacchi, PrincetonTrader.com. Check us out on PrincetonTrader.com. Check us out over at thehammerstone.com, our chat room. Have a fantastic weekend. Trade them well, everybody.